Make in India theme, private capex picking up, all of that has been discussed by the markets. What could be the sectors that could lead the rally?
This has been a narratives-driven market. Make in India, China plus one is a very good narrative. It is a right narrative.
Yeah.
But manufacturing, to grow it takes much longer than to grow your GCCs.
Hello and welcome to Navigate with HSBC, a podcast series where we dive deep into investing and market trends that help you make informed decisions. Today, we will explore the current market landscape, risk management strategies, and the evolving role of alternative investment funds. And joining me for this discussion is none other than Prashant Jain, the founder and CIO of 3P Investment Managers, a legendary seasoned investor who's navigated multiple market cycles, created a serious amount of wealth for all his investors. Thank you so much, Prashant, for joining in. It's an absolute honor and a pleasure speaking with you. Oftentimes, people get excited about government policies, government regimes, and the political scenario that is there in a certain country. And according to that, allocate perhaps for that period of time a slightly higher multiple, hoping that growth would come by. After the COVID-led excesses, etc., there's been a bit of a slowdown versus previous growth rates that we've seen to around 6.5% odd in terms of GDP. Do you think there is a case for this growth to structurally improve above this 10 to 12% mark?
See, inflation is a add-on on top of the real growth. And so for fairly long period, India is experiencing 4 to 5% inflation. So let us take that as a good guide for the future. Theoretically, you can argue that India is capable of faster growth rates. But I feel we should grow 6% or maybe slightly above. Much higher growth rates, I think, at least at this point of time. I am not an economist, but in my very limited understanding, I think that appears less likely. A lot more investments will have to happen. And that those investments can come from government or from the private sector. Or you have to have huge amounts of FDI. So we are trying for FDI. We are opening up more and more sectors. The ease of doing business in India is improving. But ultimately, it is not in your control. And gross FDI inflows in India have been reasonably stable in terms of percentage of GDP. If that happens, great. But can we bank on it? It is not in our control.
The Make in India theme, private capex picking up, all of that has been discussed by the markets and in many cases perhaps been priced in much more than what the actual output would be as well. What could be the sectors that could lead the rally? Or will it be again in the same weight as which the Nifty is?
This has been a narratives-driven market. And it has happened in the past also. So this time around, the narratives were around capex, Make in India, renewable energy, EVs, etc., PSUs. I think these narratives are right, but markets drive valuations to much higher levels than the reality of these narratives. And this is what has created excesses in these markets also. Having said that, I think Make in India, China plus one is a very good narrative. It is a right narrative.
Yeah.
But manufacturing, to grow it takes much longer than to grow your GCCs. And capex should grow faster than GDP. Currently, the multiples are higher than the likely growth rates, but prospects are very promising. So depending on one's comfort, one would want to get into that theme at some point of time.
Wonderful. That's why they call you the legend, right? That was a truly insightful conversation. Thank you so much for your time, Prashant. We hope our listeners gained valuable perspectives on the market, investment opportunities, understood the difference between mutual funds and alternative investment funds as well. We'll be back with another episode of Navigate with HSBC. Thank you so much for watching.